Gold has just crossed $3,000 an ounce, and some say that $5,000 or even $10,000 is next. But before you rush to buy, ask yourself one thing. Is gold a smart investment in 2025, or are you just reacting to fear? We've seen this before. Whenever uncertainty rises in geopolitics, inflation, or debt levels, gold becomes the star of the show. It's marketed as the ultimate safe haven, a store of value when everything else falls apart. But here is the truth. Gold is one of the most emotionally driven assets on the planet. People don't just invest in it, they believe in it. And that makes it especially dangerous for rational, value investors like us. In this video, I want to step back from the hype. Not to dismiss gold, but to look at it clearly. We'll explore what's driving these wild price targets, how gold has actually performed over time, and whether it deserves a place in your portfolio today. Because while everyone's screaming about the gold price going to $10,000, there's a bigger question we need to answer first. What's really behind this rally, and does it make sense? Let's break it down. There is a reason why people are throwing around numbers like $10,000 or even more for gold prices. And no, it's not just fear-mongering or clickbait. It's about something deeper. Trust in the global financial system is breaking down. Governments are spending like there's no tomorrow, debt levels are exploding, and interest payments are compounding like a runaway snowball. And when the pressure builds too much, history shows us what usually happens. The money printing machine is turned on. Even central banks around the world, not just US, have been quietly loading up on gold. Why? Because they know what's coming. When fiat currencies lose credibility, gold steps in. It doesn't promise growth, it doesn't pay interest, but it doesn't lie either. And that's why this asset that doesn't produce cash flow or dividends is suddenly back in fashion with both institution and retail investors. It's not about return, it's about preservation. Because if the current system cracks, gold doesn't just hold value, it reveals value. And in that kind of environment, $10,000 gold stops sounding extreme. Instead, it starts sounding inevitable. But here's the thing. Just because something could happen doesn't mean it will. Just like you clicking the like and subscribe buttons. It doesn't mean that it's going to happen, but I really hope it will. Alright, let's get back to the video. So before you pile into gold, let's take a step back and see how gold has performed over time, especially when you strip away the headlines and adjust for inflation. So let's be honest, gold has a reputation for being the ultimate inflation hedge, a store of value. However, when you zoom out and look at its performance over decades, suddenly the story gets more complicated. Yes, gold has explosive runs. For example, it went from $35 an ounce in early 1970s to over $3,000 recently. And that's close to 100 times return in around 50 years. However, at the same time, you'll see long stretches, even entire decades, when gold price barely moved. In real terms, its value stagnated, sometimes even declined. For example, in 1980, gold reached a peak of over $600. However, afterwards it went down, and it took almost 30 years to reach its new all-time high in 2007. During the same period, inflation grew by around 150%, which basically means that in almost 30 years, not only the price of gold you purchased didn't go up, but also your buying power went down by more than half. Gold is not a smooth ride, it's not a compounding asset. There are no dividends, no earnings, no reinvestments. It just sits there waiting. And here's the catch. You only benefit if you buy it cheap, not when it's already in the spotlight. So while $10,000 gold is possible and actually will probably happen at some point in the future, history reminds us that gold can actually do nothing for 10 or even 15 years, especially if much of the fear is already priced in. Still, it could have a role in your portfolio, not as a growth engine, but as a stabilizer. Let me explain how. Let's say you're buying gold not to get rich. You're actually buying it to protect your wealth, to hedge against inflation, currency devaluation, or systematic risk. That makes sense, and in that kind of a role, gold can shine. It tends to do well when trust in governments, fiat currencies, and central banks erode. That's why many investors use gold as part of all-weather strategy. They allocate a fixed portion of their portfolio, say 5% or 10% to gold. When it spikes, they trim back, and when it drops, they top it up. Over time, that discipline can provide a small but real yield, all while reducing volatility. It's not flashy, but it kind of works. But obviously, there is a trade-off. Gold is not a productive asset. It will not grow earnings, and it will not pay you dividends. As I said before, it will just sit there waiting for things to get worse. And from a value investing perspective, honestly, that's a tough sell. If you're putting in the work to find undervalued businesses with cash flow, reinvestments, and long-term growth, then tying up capital in a passive, not earning metal, even if gold goes to $10,000, is that really better than finding a business that compounds at 15 or even 20% a year? That's the core dilemma. Gold might help you sleep better at night, but if you're an active investor with the skill and the time to pick great businesses, gold may not be worth the seat at the table. So, to summarize, gold has momentum, central banks are buying, inflation fears are back, and talk of $10,000 gold is no longer fringe, it's mainstream. But here's where I personally stand. I am not buying. And it's not because I think that gold is worthless. It just doesn't fit my strategy. I'm after businesses, cash flow, growth, real value creation. Gold might double or even triple, but it just sits there. No dividends, no innovation, no edge. If you want insurance in a chaotic world, a small gold allocation might make sense. But if you're focused on building wealth, not just preserving it, there may be better options. So, should you buy gold in 2025? Only if it fits your goals, not just because it's trending. I'll stick back to what I know, owning great companies at great prices and leaving the shiny stuff to someone else. So what are your thoughts on gold in 2025? Are you buying, holding, or selling, or ignoring it completely? Do you agree with my value investing take, or do you think I'm missing something crucial? Let me hear your perspective in the comment section down below. If you enjoyed the video, consider subscribing and clicking the like button, as it does help to grow my channel. And as always, guys, thank you for watching, and I hope to see you in the next one. Bye.